Did today's data give the all clear for the central bank and for the markets? Did it give the all clear on the economy in terms of the impact from tariffs? Guy, what do you think?
I'm not convinced it gave the all clear to the central bank. I don't think anything changed. I mean, there was something in that inflation number for everybody. The headline number people got very excited about. Then they looked at Supercore and said, well, wait a second, maybe it's a little hotter than expected. For me, I think it sort of reinforces what Jerome Powell's been saying all along. Inflation is still a problem. Now, I get the markets are now pricing in a near certainty. I get it. J.P. Morgan, I think, has talked about 4 rate cuts for the remainder of this year. That's all priced in. So as much as people want to say it created this certainty and all systems are go, it's not like anything necessarily changed on the ground.
I think you overlay also the reaction in the bond market and you try and figure this whole thing out. And it's a puzzle a little bit. We saw the pullback in the 10-year immediately on this report, and then it bounced higher, finishing the day almost unchanged.
I think equities love this for obvious, as you said, first of all. But the obvious reasons are, while the core inflation that the Fed seemingly should be more focused on was actually the highest since the start of the year. So let's be clear. This wasn't a perfect number. This was a number that had some heat to it. But if you think about the good side of it, they actually showed that they were giving ground. When you combine that with a labor market that we learned, just last week has maybe some cracks in it, like your fountain guy, apparently.
Well, we'll talk about that later.
Okay, guy's got a fountain with a crack in it he's trying to fix. But anyway, the point is it leaves the Fed in a position where they can focus on the labor market, they can actually cut rates, and they don't have to worry as much about inflation. That's what the markets did today. And the reason why you saw small caps outperform everything is because people sense that the places that are most interest rate sensitive in small caps which are up 3% today, almost 3 times the move of the market. That's the expectation. You have Scott Bessent out there pushing the central bank as well. And I think this is something that people feel the Fed can move.
So I think maybe in a different administration where there was no pressure on the Fed at all, I think there's cover there to stay the course if they want to stay the course, which is do nothing. But that's not where we are. And I do think, as Tim said, there's a little bit of cover there in the labor market. So I do think they will cut. I think they should cut. I think they will. There's still a lot of room, though, between, a 25 basis point cut doesn't really do much of anything. And maybe, I don't know, cools the rhetoric. But I do think there's some cover for it. So that's what the market wanted to see. And if this is the beginning of a significant rate cutting cycle, not 1 or 2, then that is very good for the market.
Yeah. It's, I would say, I don't know, a mystery wrapped in a riddle inside of enigma. I mean, like when you look at the rally today,
sounds like Russia, according to Winston Churchill.
Yeah,
that was
I think I got the order
close enough.
Close enough for government work, as guys' dad used to say. I just say this: like, we're applauding the stock market, 1.25% GDP growth, 4.2% unemployment growth, 2.7%, on the inflation front, and we still have a Fed funds at 4.5%, which actually seems just fair. You know why? Because the stock market is trading at all-time highs, trading at about 22.5 times, maybe 24 times forward. So, cutting rates, we saw what happened last fall. Not a whole heck of a lot. I mean, the economy was able to kind of deal with 4.5%, Fed funds rate over the last year or so. So I just find today's behavior really odd that you have, and Tim just mentioned what went on in the small caps. It just kind of suggests that the economy is starting to inflect and that the market participants have to chase that right here. And we're going to go over a bunch of stories today. All of them speak to, in my opinion, a bit of overexuberance or the unwind of exuberance. So looking at a Kava down 20%, that stock has lost 75% of its value from high. I know we're going to do it, whatever, but I'm just jumping. No, I mean, but I think these things are important.
And for the last block of the show,
my fountain.
All right.
We'll get to it.
Right.
Anyway.
But my point is, this seems like today's price action in particular, when you have the 10-year going nowhere, all that sort of stuff, it just seems really odd to me. Really odd.